So litigation finance is nothing more complicated than treating litigation claims as financeable assets. You know, you have lots of things, lots of kinds of assets that can be financed, receivables, for example. Litigation is just a special kind of a receivable. When I'm suing you, it's an effort to get money to move from you to me. There's risk and there's contingency associated with that, but fundamentally it's no different than me trying to get money from you in another form.
How much does the plaintiff walk away from percentage-wise when a venture capital, when a litigation finance firm comes in?
Totally depends on the underlying risk of the litigation, as you would expect. These are assets that are market priced just like any other risk-based asset.
Was it 55%? Is it 25%? What, give me a range here.
Well, as you probably know, standard U.S. contingency fees tend to run in sort of the 25 to 33% range, sometimes as high as 40%. Many of our returns, if we're starting a case at the very beginning, are in that similar range. But this is corporate finance. The business that we're doing is large dollar, large corporate activity. And so these are individually negotiated deals with large clients that depend on the risk.
So Muddy Waters goes in and they say that it's not that there's so many opportunities and that's not why you're getting such a big run up, but because of the way that you're pricing your assets. For instance, it says Burford has sold 10% of this particular claim in Argentina called Peterson, 10% of this claim for $40 million in December of 2016. By this year, this summer, 10% of that claim went for $100 million, which implies a value of $1 billion. How do you get on the same case from $400 million to $1 billion valuation?
Well, fundamentally, you get a big change in what has happened in the underlying case. And in that particular case, the Supreme Court of the United States came out and agreed with the position that we were taking. And that obviously has an enormous amount of weight and changes the valuation that sophisticated institutional investors are prepared to put on an asset like that.
Why is this company saying all these nasty things about you?
I don't have a lot of time to deal with Carson Block and his new sidekick, Stormy Daniels. I think the reality is he makes his money by coming in very rapidly, running a short attack on a business and coming out again. He closed his short on Burford months ago, the day he started making all these allegations. And I think we've comprehensively debunked, and our investors agree, all of these allegations. What you're seeing now in the shares is some post-attack volatility in both directions, up and down. But what I think you have today is actually a pretty good value opportunity. We did 25% EPS growth last year, and you can buy, and higher before that, you can buy that level of EPS growth today at 6 times trailing PE. That's a pretty good value for long-term growth.
But you have said that this Peterson case represents a large share of your bottom line. And right now you're arguing in U.S. court that it should not be moved to Argentina. You don't think you can get a fair hearing in Argentina for this particular case. It's very risky. So tell investors, if you've got short sellers on your tail, if you've got court hearings going on, what justifies the risk? What's the return?
Well, our business is not about one single case, but it's about a large portfolio of cases. And at any given time, we have any number of large cases that are moving through the courts. Some of them will be terrific successes. Some of them won't make any money. And a large number of them, the majority of them, are going to settle. And that's what litigation is all about. Most litigation settles without going to court. And that's where the middle of the road in litigation finance exists, and that's how we make a good deal of our money.
How do you pick the cases that you're going to invest in?
So we work together, and our client base tends to be large companies and the large global law firms. We work together with our clients and the law firms to identify opportunities that are both financeable for the underlying client, where a CFO is saying, I would like to take some capital in against this litigation asset that I have today and that isn't doing anything good for me. So we work together with clients and law firms to find cases that both are meritorious and also have sufficient economics that everybody's going to end up happy, the client, the lawyers, and Burford and its shareholders.